Hi everyone, my name is Aidar Sabirov and I'm the CEO of the Antipet Launchpad. I haven't done a webinar in quite some time. Today, we are excited to welcome the MarsBase team, founder Dennis and CEO Anastasia. We'll be asking them some questions to learn more about the MarsBase ecosystem, the products they offer, their plans for generating revenue, and how their utility and token are expected to grow. Let's give them a warm welcome. Hi everyone, I'm thrilled to welcome Dennis and Anastasia, the founder of the MarsBase project and its CEO, as our guest today. Hi guys. Hi everyone. Thank you for joining us. Thank you for having us. Great. Let's start with this question. Could you please tell us what MarsBase is all about? I spent hours explaining every aspect of our platform to you when we were together in Bali. Didn't I, Aidar? And I'm more than happy to go over it again, especially considering the updates we have made over the past 2 months. MarsBase is a platform that enables trading and providing liquidity for various top-tier low-liquidity crypto assets. These assets are considered low liquidity because they are locked. These include various token allocations with vesting schedules, such as shares owned by project founders or early investors. The tokenization we have implemented on this platform provides the retail market with entirely unique opportunities to access, utilize, and trade these top-tier assets. Additionally, through this platform, we are opening up the traditional financial market to retail investors and Web3 funds. It's a space where significant liquidity and large-scale deals come together, transactions that are typically conducted in a B2B format, such as between funds or between funds and large syndicates. However, we also see deals involving retail investors and retail liquidity. It's like a gateway into an exclusive private club for the elite, where players like Paradigms, A16Z, and others have traditionally operated. But now, this is accessible to the everyday crypto enthusiast as well. That's very interesting. Yes, we had the chance to get to know you and your project quite well during the ex-founders bootcamp in September. I'm sure our audience would love to hear your story. Could you share a bit about how the idea came about and how you started developing it? Historically, MarsBase is not a new company, and we have always operated in illiquid markets. During the last bull run, when we launched the project, we facilitated large deals between funds or between funds and major investors with liquid tokens, particularly when DeFi was booming. Often, this led to price dumps because the pools on platforms like Uniswap and PancakeSwap were still relatively small, and many projects were not even listed on centralized exchanges. We had to remove large orders from the market and execute them as a broker. Our platform offered a smart contract solution for these OTC deals. OTC is often perceived as simply buying Bitcoin for dollars, but in reality, it's a much broader concept. For instance, if you want to exchange something like Tone tokens, Solana, or similar assets for $10 million, you're almost certainly not going to do it directly on the open market. That's the business we were in. Then the bear market hit, a challenging time for everyone. We realized we needed to expand our business model. We identified a clear market opportunity, at least for me and my team, the private equity market. This involves funds and various investment structures participating in early stage rounds of startups such as seed, pre seed, private rounds, strategic rounds, and so on. They purchase allocations of shares and tokens, which are gradually unlocked over time following a listing. Launchpads operate on a similar model, but typically focus on later stages. We found strong product market fit in this niche. We began trading shares in these startups, those funded by investment firms, and dealing with locked allocations acquired by funds, advisors, often as compensation for services, or even the founders looking to secure additional capital. These transactions were also B2B, between funds or between funds and investor syndicates. But in 2024 and even at the end of 2023, we were the first in the market to test tokenization in brokerage activities. This was before the media and even we had heard about BlackRock's Beetle Fund or the Securitize project. At that time, there was no such precedent, at least not in the European, CIS, or Asian communities. We started tokenizing deals. We were the first to tokenize Layer 0 and several other Tier 1 assets, though I can't disclose their names. Eventually, we tokenized MarsBase itself. This wasn't just about tokenization as a real-world asset product. It was a practical tool. It enabled a fund to exit an asset by distributing it to a range of retail investors, smaller funds, or syndicates in various ways. We realized this tool is perfectly suited for the upcoming bull run and, more broadly, addresses the issue of fair capital distribution. We then started applying this approach to other areas of MarsBase. For example, we use it to help projects that came to us for OTC services, raise funds, or to assist other funds in making primary investments. We also started tokenizing startups in these processes. Today, nearly every service MarsBase provides, both the newer offerings and our established ones, either incorporates tokenization into its workflows or is gradually integrating it on a technical level. Today, MarsBase is a suite of products, not just OTC services and brokerage. One of our key offerings is a lending protocol that allows holders of locked allocations, vested tokens, or equity shares to collateralize these assets, similar to how platforms like Aave, Compound, or Centrifuge operate. This enables users to unlock liquidity from these assets, injecting it back into the market to fund new startups or projects. In other words, to bring health back to the market. And this is all made possible through tokenization, as these collateralized assets themselves become tokenized. This opens the door to retail investors. We acquire specific deals and assets from the market and tokenize them. These are top-tier deals, high-level Web3 projects like Scroll, Monad, Celestia, Fuel, Layer 0, and ZK. Projects we anticipate will drive the next bull market. By tokenizing these assets, we will soon enable retail investors to purchase these tokenized allocations alongside funds. That's our story, it's our core activity, and we specialize in bridging markets. I hope I explained it clearly. Let me briefly touch on the problems MarsBase addresses. The liquidity issue that Dennis mentioned concerns the billions of dollars locked in illiquid assets. Through tokenization, we not only facilitate trading of these assets, but as Dennis explained, also open access to the behind the scenes Web3 market for retail investors. What happens to the capital, the investments, and the well known story of how large holders often, shall we say, dump their tokens on retail investors after a token listing? The thing is, every project that raises a funding round spends at least half of that budget on marketing to build a community. But what does the community get in return? They get the opportunity to join the project when its token is sold on the launchpad. This usually means the community doesn't have many strong reasons to hold onto the asset. Meanwhile, early major investors, like retail investors, typically want to flip their capital as quickly as possible by selling the tokens. There are groups like you and Webwise Capital, and we're very happy to be working with you. These are investors who believe in projects and say, I'm in for the technology. People who genuinely strive to help founders grow ecosystems and so on. But as the saying goes, it's not always the case. That's precisely why it's important to level the playing field, balancing the chances of success and profitability between major funds, early large scale investors, and the retail audience, which can also believe in the project just as strongly. At the same time, it's clear that the audience isn't willing to just serve as exit liquidity for large project owners and investors. And this is where Mars-based projects come into play. It's a chain of interconnected initiatives. I'm sure the viewers of this interview can access Mars-base's page on Antipad, where you will definitely find a slide outlining the three key components of the Mars-based ecosystem. First and foremost, our foundation is the OTC marketplace. This is what helps us retain and provide value to the network of major funds and prominent founders. The second component is our lending protocol, and the third is our brainchild, specifically designed to give retail investors access to opportunities that until now have been unavailable elsewhere. Our brainchild, or rather, I would call it our robust brainchild. It's actually quite fascinating. Your main product is the OTC marketplace, where founders of large scale projects can sell part of their allocation. At the same time, VC funds or business angels can purchase these allocations directly through your marketplace, bypassing the open market. But it's not just funds, not just funds. I would broaden this to include accelerators, launchpads, and retail investors. That's really the essence of it. It's not just about providing access to top projects through tokenization, but also offering an opportunity for an exit. After all, an exit strategy is the key to success for any investor. Exactly, that's clear. Afterward, these assets are tokenized, enabling deals to be made without the usual legal and documentary procedures. Essentially transferring assets via KYC verified wallets to other market participants. And here's the question that interests me. For retail investors, for a larger audience that doesn't have significant amounts to invest, how will this work for them? As far as I know, this product of yours is called Landscape, right? How will it function? The Landscape product is a lending protocol. The name combines lending and scape, referring to broader map or landscape. MarsBase Landscape was historically developed as a lending protocol that allows tokenized assets to be used as collateral for loans, providing liquidity at interest rates that are far more attractive than those offered by Aave, Compound, Centrifuge, and other similar protocols. Moreover, it creates opportunities for other investors to act as liquidity providers, enabling almost anyone to participate in this ecosystem. And then, if necessary, they can step in as liquidators of these assets, purchasing them from the market at very low prices, much like what happened during the FTX collapse. Back then, Galaxy Digital and its partners acted as liquidators, buying up assets for next to nothing and obviously seeing exponential growth. The product you are referring to, however, is a retail-focused one, Marshmallow. Anastasia came up with an interesting concept involving marshmallows, which she will definitely explain in more detail. These products serves as an entry point for retail customers and operates in the simplest way possible. We have exclusive deals on the secondary market, and sometimes we come across incredibly yummy opportunities. For example, Gonzilla, which everyone is chasing right now, is available at a very low valuation with excellent vesting terms. Or take Layer Zero or several other assets, though the specific examples aren't the main point. Instead of providing traditional brokerage services, we take a different approach. It's much more interesting to create an opportunity for assembling a small syndicate within a deal, tokenize it, and then offer those tokens to retail investors after completing KYC. These tokens are standard ERC20 tokens on any EVM-compatible chain. Currently, we're using Ethereum, Binance, and Polygon with other chains to follow. These tokens are tradable, they can be sold, transferred, or used to create liquidity pools. They can also be used as collateral on MarsBase, allowing users to borrow and return liquidity against them. Additionally, they can be resold to lock in profits. And most importantly, these tokens can be exchanged for liquid tokens, which are then introduced into the market. What does this achieve? It redistributes large, exclusive, high-quality deals and significant capital that might otherwise enter the market all at once, via a fund, potentially dumping the price, triggering a panic sale and unraveling retail investors through market makers, investors who are simply trying to build their wealth. We redistribute this liquidity among individuals who are genuinely interested in the project and want to participate, each with their own unique strategy. By the way, if I may, let me take a moment not to spoil anything, but to do a bit of self-promotion. I have my own personal channel where I have started posting in both Russian and English. And recently, I wrote a short essay inspired by Arthur Hayes about how deal tokenization, borrowing the best aspects of meme coins, could help keep this bull run green for as long as possible. How does tokenization work, specifically the redistribution from large players to retail investors through tokenization? Let's take the strategy of meme coins and the concept of fair token distribution within a community as an example. The infinite buying power that arises as long as the community believes in the project enables projects to sustain longer lifespans and allows investors of any size to earn for a more extended period. I highly recommend subscribing to my channel, reading the essay, leaving comments, and sharing your thoughts. Does this approach resonate with you, or does it feel distant? Great, but I would still like to learn more about your product, landscape, and introduce it to our audience as well. What are its key features, and how exactly does it aim to solve the liquidity problem? Specifically, the issue of liquidity for investors who are tied up in certain deals. It's all very straightforward, really. Let's say you invested in a top-tier project 6 months or a year ago. Without a doubt, it's a top project, one that ranks in the top 10, 20, or 30 on CoinMarketCap. This project, for example, has a vesting period of 2 years. You might have invested through a launchpad, a syndicate, or a fund. It actually doesn't really matter. And the asset you invested in is growing in value on paper because new funding rounds are being announced. The TGE is on the horizon and there is a stream of great news. Your asset is skyrocketing in value, multiplying by tens of X's. You believe in it, you don't want to sell it, and you don't want to do anything with it. But you are stuck with so-called paper gains. At the same time, a whole array of opportunities is in front of you, a buffet, so to speak. These range from meme coins to solid, fundamentally strong projects or hidden gems. The type will also help identify. And you don't have any money, because venture capital investment is a tricky thing, right? Exactly, that's right. You enter the launchpad, go through some nodes and other steps, and then your funds are gone. But you need to recover your capital. So, you come to Landscape, take your tokenized asset, which you either acquire through us or tokenize with us. We will score you. We are working with a team from Bali, from Gate.io, a project that also raised investments, if I remember correctly. Together, we have launched a neural network that scores you as a borrower. Soon, your asset will be evaluated just like in a bank, with a loan interest rate and liquidation level, similar to Aave and Compound. If you're okay with it, you deposit the asset into an escrow smart contract. It stays there untouched. Then, you take stablecoins, dollars, that you can use however you like. Just make sure to pay the interest on time. Loans are available for any term, 1 month, 2, 3, 5, or 6 months, whatever you need. That's it really. This way, what was previously locked becomes unlocked, allowing it to work for the benefit of the market, your wallet, and your capital. The Landscape product integrates seamlessly with the Marshmallow product designed for retail audiences. The name Marshmallow resonates with marshmallow, a reference to the marshmallow test. You might have heard of it. The idea is simple. Children are given one marshmallow and told that if they wait 10 minutes, they will receive a second one. It's a test of patience and delayed gratification. In this case, it reflects how retail investors can wait to gain access to highly valuable assets with established product market fit. The price will be significantly better than the listing price, and better than the price that retail investors who don't take advantage of this opportunity will get later, and possibly better than the price at which some funds or large holders might exit. So, Landscape and Marshmallow are closely connected, as Dennis explained. If an investor holds an illiquid asset and has a source of income to cover loan interest, they can use Landscape. If they are unable to pay the loan interest, they can tokenize that same illiquid asset and allow retail participants to invest in the project. We provide them with this opportunity, not just to gain access to the asset, but also to manage those tokens according to their own strategy. For example, they might decide to use the tokenized illiquid asset as collateral for another transaction. And this creates additional profit opportunities. First, you acquire the project asset at an excellent price. Second, you hold onto it instead of selling, and its value likely appreciates over time. Third, you can secure additional capital by leveraging the asset, which you can then invest in something else. These are strategies commonly used by market makers. They hedge their position through OTC, buying large volumes of unlocked assets at a discount from the spot price. They also leverage borrowing strategies and employ a variety of other tools. Why do they make money? Because they diversify their risks using different tools. Let me take a quick step back to clarify for those who might be listening, whether they're entrepreneurs, business people, or investors familiar with traditional markets. When you start a startup or launch a business, you often need working capital. In the traditional world, banks fulfill this role. You go to a bank and say, "Look, I have this business, I earn this much per month. Here's my strategy and business plan. Annually I generate X amount of revenue. I might have assets in leasing or something similar. It doesn't matter. The point is I have assets in the business, or I'm willing to pledge a share of my business as collateral. The bank often provides you with funds to help you grow. Or investors can lend you money for growth, so you can turn that capital into more money. But in the crypto world, we don't have traditional banks. The very philosophy of crypto doesn't accommodate them. And there are also no banks or protocols that would lend to founders, entrepreneurs, or funds using their assets as collateral. For them, those assets, such as top-tier Web3 companies or the allocations you buy for millions of dollars, are extremely valuable. But there are also no places where these assets can be reused. There are a few platforms, of course, and they're developing alongside us, helping to build this market. But there are very few of them. This is an entirely new market with an incredible future. Because tokenization isn't just about Web3, it spans traditional finance, government bonds, and a whole range of other interesting areas. I truly believe in this product because it acts like a carbon copy, bridging Web3 and Web2, making processes very understandable for those familiar with both traditional markets and finance. Because it brings an additional capital to help grow the company, reinvest funds, and develop new areas when you don't have a bank to turn to for that money. And that's it. Moreover, I'm confident that everyone listening has heard about the trend toward RWA. It's a massive market. But when we talk about RWA and assets tied to real Web 2 businesses that operate offline, what's their growth potential? Achieving 10, 20, 30% annual returns is considered an excellent trajectory. But the Web3 market operates on a different scale. When we discuss their RWA segment related to Web3 businesses, these assets have the potential to significantly multiply their returns and do so year after year. This growth is driven by the increased adoption and smart strategies that help maintain stable results across different market cycles. So, anyone interacting with such assets, tokenized RWAs, within this segment of the market currently generating the highest returns, gains access to that yield with lower risks compared to simply holding tokens from individual projects. In the latter case, it would take much more time, effort, and expertise to develop a smart and secure investment strategy. By the way, this is also part of Marshmallow's investment strategy, which is backed by these tokenized assets. There will be pools, indices, and various easy to understand diversified tools, along with analysis powered by neural networks, a comprehensive and clear plan, and the prospects for these projects. All of this will be accessible to any type of investor. Yes, there are certain conditions tied to the MarsBase token, which is the core of the ecosystem. But in any case, it will be available to all investors. Wow, it sounds very interesting. I have the following question, and I believe many of our viewers, as well as our community, are probably wondering the same thing. If someone participates in the upcoming MarsBase sale, will there be an opportunity in the future to collateralize this asset and obtain liquidity for it? Sure. To answer your question with numbers, we first need to establish the market for this token and build its retail recognition, as its B2B recognition is already more than sufficient. We currently have nearly 1,800 connections with B2B clients, chats, and various transaction requests. These range from OTC deals to loans and investments, However, building retail recognition is something we still need to focus on, and that's what we are currently working on. But 100% of the secondary market for MarsBase, the MarsBase credit market, and the tokenized MarsBase soft will all be available. Even by participating in the sale and purchasing tokenized soft or simple agreement for future tokens is an allocation, a future promise from us to deliver a certain number of tokens to the investor when the token is listed with a specified vesting period. These assets, along with others that aren't yet available on the market, can already be used. You will be able to stake them, use them on the platform, earn tires, and so on without having to wait for the tokens to be listed. And this is the whole point of tokenization, because it allows you to start using the assets right from the moment of ownership. You can give them to your grandmother, for example, or send them to her. Or you can create a liquidity pool with them, call it something like Mars and Jupiter, and send it to a Solana platform for meme coins. And basically, that's how it works. Yes, tokenization gives all holders of tokenized MarsBase softs the ability to work with them. Even if the actual main token, MBase, has not yet been distributed to their wallet. So, the vesting process and cliff period are in place. You still earn yields, additional perks, and possibly drops. Side eye, as they say. Additionally, there are benefits on Marshmallow and Landscape, possible rewards for our investors across different tiers, and advantages in role distribution within our ambassador program. At the same time, if you have tokens, the tokenized soft of the company, on your wallet, it means you are a full-fledged, respected, and valued member of both the community and the broader network, participating in everything happening within the company. Yes, and as you mentioned, being respected is the most important thing. Now, let's talk about the drops. Before we get to the drops, let me add a little something. I think many of our viewers are already eager to join your ecosystem and get the opportunity for an allocation. Right now, you can head over to antipad.io, learn more about the MarsBase project, and participate in the project and all the products we've been discussing. Personally, I am very excited to see how it all works in practice. By participating in the Launchpad and securing your allocation, I will be able to free up some liquidity in the future and take part in other projects as well. And that sounds really interesting. Furthermore, the number of projects eligible to be used as a collateral is quite limited. Everything related to DeFi is traditionally associated with high risks, and we understand that. We have developed a comprehensive asset and borrower evaluation model to mitigate these risks. This is all aimed at ensuring the safety of the project, liquidity providers, and of course, investors, both institutional and retail. As I mentioned, the number of projects will be limited. However, liquidity providers, recognizing the value of the project, also understand the value of MarsBase and our tokens. Therefore, those who want to collateralize their tokenized MarsBase soft in the protocol are willing to pay the interest rate. This is because they truly have the conditions to enter deals that match the investment potential. They gain access to opportunities that very few other Web3 projects will likely be able to access. That's interesting. Dennis, could you please tell us who the investors and key partners of your ecosystem are? The first round we raised was primarily composed of private investors and syndicates. as well as family offices that were using our product. This includes AI Capital and a number of feeder family offices. I believe retail investors have probably not encountered or interacted with them. The second round we opened is private, with WebWise Capital as the investor. Right now, we are actively working on agreements with funds that are part of the Solana Foundation ecosystem. This is because during the bootcamp and the reality show we participated in together, the Solana Foundation expressed interest in integrating our project into their ecosystem. Even though they are focused on non-coin as well as various project softs and credit protocols, I mean our MarsBase, of course. So I will reserve the juicy funds for the private round, the pre-TGE period, and the IDO and launchpad stages. In the first round, we raised more private capital, including from clients and angel investors, those who understood the value of OTC and tokenization. As for strategic partners, we have been closely working with Bricken and Company DAO. These platforms have been in the tokenization market for a long time. They work with institutional investors and Tier 1 clients. Our project's advisors include Ivan Bernitsky, a mentor at Techstar GVA Capital, and a person who handles major M&A deals or mergers and acquisitions, including in Web3 markets. He has connections with Tier 1 players in the United States. We also have Karen Tong, the business development officer at First Digital Group, a Hong Kong-based stablecoin that many retail investors are now trading on Binance. BUSD was replaced by FDUSD, as you may have noticed. That's right, First Digital is the largest Asian stablecoin company. Karen Tang is helping us with the strategic development, working with institutional investors and handling the B2B side of the project, which will provide incredible investment opportunities for retail investors. We are merging B2B and retail to create this synergy. We also have Will Maguire, who launched some of the biggest drops in the Web3 space, and he's helping us with marketing and guiding us on how to launch a B2B product in the Web3 retail space. Everything else is available in the company profile, which you can check out. So stay tuned for some exciting and interesting updates. Regarding partnerships, I will add that the main focus for MarsBase is not on partnerships for the sake of appearances. I believe many Web3 projects aim to share as many news and partnerships as possible, but these don't always bring real value in terms of product development or, for example, mutual business benefits. Our focus is much clearer. First and foremost, it's aimed at expanding our access to financial resources. This means strengthening the DeFi protocol and operational capital to further grow our ecosystem. Secondly, it's all about access to the resources of investors and participants in all products. As Dennis mentioned, we already have a very large network of venture capital funds, syndicates, and family offices, not only in traditional jurisdictions, but also in the Asian market. We handle a significant volume of OTC deals with participants from this market. These are the people we are discussing potential participation with as liquidity providers for the protocol. As for human resources and community expansion, We have conducted tokenized soft deals with AI network and have been actively brainstorming new product ideas with several other launchpads. I can't disclose their names just yet, but these are their partners we will likely work with for the public sale before their listing. But what's even more valuable is the willingness of the largest launchpads, which you're definitely familiar with, to collaborate with us on attracting their audiences and capital to tokenize rounds for major projects. When we talk about, for example, the next big unicorn in Web3, the early investor might sell a portion of their soft for $500,000. We gather $250,000 from our community, and the remaining $250,000 comes from our partners who have syndicates, launchpads, investment communities, and even their own audiences. I want to highlight that this is part of our marketing strategy, working with the founders of major projects. Typically, the marketing budget for a single project is around half of the round they are raising. This entire budget works towards building a community that is far more interested in entering the project's token at 10 cents, buying it from an early investor who purchased it at 5 cents, rather than having to buy it later on a launchpad at 80 cents or more, or on the open market at even higher valuation. And this partnership vector that Dennis mentioned, tokenization platforms, especially in terms of the legal aspect of the business, allows us to secure and reduce risks while increasing profitability and safety for investors from all angles. What does increasing profitability mean? It means more rewards for token holders, higher dividends, healthy and proper buybacks, and community support. And that's really great. We're one of the few projects on the market that has been doing well and making money during the bear market, and overall, we are focused on revenue streams. That's great to hear. You guys have an impressive lineup of reputable partners and funds. I would like to take a moment and address our community. On our platform, you have the opportunity to participate in the private round and join the MarsBase project. I would like to point out that we don't have our own token, unlike other launchpads. We offer each participant the chance to enter the private round of such a fantastic project like MarsBase. Now, I have the next question, which I believe many of our community members are curious about. How does the MarsBase ecosystem plan to generate revenue, or how is it already earning? All three products generate revenue through transactional fees. On one side, these are commissions from OTC deals, credit transactions, and venture and private tokenized deals. Additionally, there is the tokenization service itself. Since we are experts in this field, we know how to sell it correctly, efficiently, and at a premium for those who are tokenizing. For regular investors, however, there is no cost associated with this. There are various investment strategies where we leverage insider information and have a deep understanding of the market and the dynamics between capital owners, founders, and their major early investors. This means investing in projects, as well as selling them later and profiting from the spread. Additionally, we provide opportunities for asset liquidation and generate earnings from that as well. These are transactional fees from credit repayments, token transactions, and more. As we move forward, we will have a DEX that will allow trading of tokenized softs and safes, that is equity, or any other asset that is tokenized. So there are three main directions. with one, two revenue streams in each. Some are less scalable, but we are turning them into larger ones, while others are smaller but more scalable. Essentially, this is a fully fledged, almost exchange-like structure. In my mind, I sometimes refer to it as a NASDAQ for low liquidity assets, and I am confident that we will get there one day. The advantage of a model where the main revenue streams are based on commissions is that, in terms of operational management, which is my focus within the company, it's much easier to align any strategy, marketing efforts, or company activities around increasing a few key metrics. You increase the number of clients, the volume of transactions, and as a result, your revenue grows in direct proportion. This is the simplest and most bulletproof model, one that a significant portion of large Web3 projects operate on. It's not only leverages a trending topic, but also engages with major market players, including institutional capital. Yes, indeed, you have great potential, and especially since you have already been in the market for several years. That shows strong tractions. We are really pleased about that, and it's exciting for us to be a part of your growth. And we are really happy about that too. Alright, let's have one last question. I would love to discuss the utility of the MarsBase token, which brings together all these amazing products. What benefits will it offer? And why do you think the token's price will increase in the future? I will start, I guess. Right now, we are mostly talking to a retail investor audience, and I really enjoy working with them. In my experience, 8 years in Web3, it's mostly been about building communities, launching Web3 projects and tokens, and developing businesses. The early stages were focused on direct work with the audience of crypto traders, various students from trading academies, and asset managers. I really enjoy working with these people because they are the essence of the crypto market. They are the ones who gradually learn complex concepts. Right now, we are discussing MarsBase, illiquid assets, tokenization, RWA, and it's for these people that we are building the retail platform. The MarsBase token, available now through the Antipad round, is the lifeblood and heart of Marshmallow. By holding a certain amount of MBase tokens, you can stake them. Essentially, this is a launchpad model that gives you access to allocations, entire projects whose softs were previously listed on the platform. It's that simple. The advantage for those listening to us now, who are joining through Antipad and directly entering the MarsBase private round, is that in the future, the capital they are ready to invest through Marshmallow might not be the main source of funds filling the pools. Previously, I mentioned partnerships with other investment communities and launchpads. These are the guys who will buy MBase tokens from the market. They won't have the opportunity to enter our private round anymore. As a result, the valuations will be different. But who will they be buying the tokens from? From early investors. The further and faster the retail platform develops, the more projects we will be able to onboard there. I could talk for a long time about the benefits for the founders themselves. But we have done a lot of customer development with both founders and early investors, and the feedback we are getting from both groups is very positive. Everyone understands the advantages of this approach. The more projects are listed on the platform, the larger the community grows. The larger the community, the greater the demand for MBase tokens, as people want access to these allocations. And I'll add that there likely won't be any other way to access these tokenized softs on the market. This is what we are talking about when it comes to the retail platform. I can add point number 2, which concerns our ambassador program. Future plans for a token drop, and a significant part of the tokenomics that you will also be able to check out on the Antipad website on the MarsBase page. It focuses on community activities and rewards. For the most active participants, we will have tasks related to research. Some of them might even be able to learn a new profession. After all, what we are doing is really an innovative direction in the Web3 development. This is what we have finally reached, right? Yes, this is the ambassador program, and naturally, access to it, along with additional perks and additional ratios, will be available to those who participate in our early rounds. I would also like to add something about the deflationary nature of the token and the model that will drive demand. It's important to understand one simple thing. Illiquid deals on the larger side, the B2B side I've been talking about, huge blocks of frozen assets held by founders and funds who are suffering from this, and money that could enter the market and bring value, don't enter. This is because the market is illiquid. I don't really like the word illiquid, but there isn't a shorter term for it in English. Trading illiquid assets is quite expensive. I won't hide it. MarsBase, at least the OTC desk, earns between 1% and 10% in commissions on deals, depending on their size. Smaller transactions with more tokenization processes involved result in commissions closer to 10%. For larger transactions with more liquidity, making them easier to sell, the commission drops to around 1%. But this is still 3 to 30 times higher than the typical commissions on decentralized exchanges. Of course, funds, B2B clients, and even medium-sized wholesale, that is syndicates, which are made of retail investors but still sit somewhere in between, are more than happy to reduce these commissions and get better valuations by using the token. Essentially, they will use the token to pay for our revenue. And we, in turn, will gladly burn these tokens quarterly, use them to add liquidity to decentralized pools, take them off the market for rewards, and so on. I'm not talking about the deeper strategies, like how we secure the tokens or what we will use to back the pools on DeFi Llama and other credit protocols. I'm referring to the simpler things. Large deals want to cut costs by using the token, which then gets burned, locking liquidity. The token is used as a reward and helps attract more retail investors. The second aspect is offering exclusive conditions and additional rewards for those who use the product. What do we know about RWA? We know there are some projects like Ondo, which is the biggest one. We know a bit about them, and we know who is on board with them. Maybe we will buy from Ondo to speculate. But overall, to get more people into the RWA market, we need to collaborate with projects like Ondo and others to create various promotional programs. It was like in 2020 and 2021, when various pools were created on 1inch. You stake something there, receive 1inch tokens, and on top of that, you get an APY of 100%. Plus, you get a Uni tokens when Uniswap first launched. and suddenly your pool has a 250% return. Now that's interesting. It's not YFI, of course, but still. We want to use the same promotion and incentive mechanism for retail. But the size and exclusivity of these offers, deals, etc., will follow the same familiar and clear launchpad model. There are different access levels. And how do you gain access? By staking the token. It's very simple and straightforward, without any complex schemes that are popular in DeFi products. And of course, we have the e-commerce mechanics for payments on our platform and in our service. Please, pay with a discount. I don't see anyone specifically working on developing and promoting platform tokens. That's a separate issue. But I believe we have outlined the key utilities, including using the token as collateral. Yes, the most important and straightforward aspect is that the utility of the MarsBase token is strong for retail investors. Many people buy Web3 tokens with a speculative intent, but in this case, even for those who participate in the Web3 market to make money and are not too concerned with the technology itself, the MarsBase token provides access to other tired projects. These satisfy their interest. This is the first and most important point. But the second point is equally important. It concerns the utility for B2B. We have examples of major projects in the market whose utility for retail is virtually zero. Partially, this applies to Chainlink and many projects in the top 30 of CoinMarketCap that work exclusively with institutional B2B participants. Nevertheless, because their business model is tied to the token, and their clients have reasons to buy this token, including from the market, news about partnerships and product developments stirs interest among retail speculators. What I'm getting at is that the utility of the MarsBase token meets the needs of different market participants. Even without the retail platform, launchpad model, token buybacks, staking, and so on, the demand for this asset would still be very strong from our B2B clients and any institutional participants in the protocol, specifically from the OTC platform, which operates independently of the retail part. The retail aspect, however, is part of a broader vision for the future, primarily Denis's, and also mine, focused on building a project that benefits a significant portion of the market, and not just its largest participants. Wonderful, great. Thank you so much for such a detailed response. I think we can wrap up here. Thank you for joining us today and for making this such an amazing interview. I hope your pool just gets flooded with interest. Yes, I think our dear viewers just cannot wait to take part in this amazing project. Thank you so much. I'm really glad to see you. I respect and admire you as a person, a professional, and you're such a great person to talk to. I wish you all the best. I also wish us luck. Anastasia, thank you so much for joining. We're all in different time zones, and it's really great that we managed to make it work. I can add that, as a team, MarsBase strives to be at the forefront of communication with our retail and institutional investors. But anyone who has questions, requests for additional information, documents, video explanations, presentations, don't hesitate. Join our Telegram chat, tag me or Dennis, and we will be happy to share everything we know with you. Because working with the retail community is a very important driver and motivator for us to move forward. Great. Thank you so much again. Bye, everyone. Bye. Dear friends, you can head over to the website antipad.io right now, or click the link in the description to participate in the project sale. You can check out all the details, including upcoming partnerships, listings, and more, and feel free to ask any questions on our social media. Thank you all very much, and see you soon.